Donald, I'll start with you. You follow freight flows. They tend to be a very rare, early, and accurate indicator of broader economic growth. What are the charts showing you right now?
Well, they are. You're right. It's the net result of people making things, people shipping things, people buying things. Freight flows right now are showing us that North America continues to be strong, in particular the U.S. economy, trucking economy, whatever metric you want to use to track that. When you look overseas, though, you see a different story. You're seeing deceleration in Europe and Asia, particularly in the high-value, low-density end of the freight flow spectrum.
Kirk, in terms of the data you look at and how that adds to your investment thesis right now, do you see that global economic slowdown, particularly in parts of Asia, in Europe, as the biggest risk for markets more broadly?
Well, no question, Europe and Asia are slowing down, and that is a headwind. And that's why, to me, I'm very constructive on the United States. I don't think the rest of the world can accelerate until the United States stabilizes. But I think in the near term, the safe place to be is to be in the U.S.
So, Kirk, do you think that's the most likely next step here, is that the U.S. stabilizes and then the rest of the world gets pulled along? Or the fear has been that the U.S. ends up getting pulled down by the rest of the world, especially given the headwinds like the government shutdown and trade tensions?
It could be, but the U.S. economy is pretty strong. If you think about it, I'm looking at earnings this year up 6%, with dividend yields up something like 2 to 3. And, that's a pretty good market. So I think machines ran the markets before Christmas and the holidays, and I think the market sell-off was way overdone. So I think the U.S. economy continues to be pretty strong. Obviously, you got to watch exports and you got to watch the dollar.
Donald, I spoke to CSX CEO Jim Foote just a short while ago, and I know one of the things he said is that the freight railroad, they're not seeing any signs of slowdown in U.S. economic growth right now. But you have another chart showing the slowdown in Europe, which is something another transport, FedEx, cited recently. Should we be watching that more closely? Should investors be watching that slowdown more closely than perhaps they have been?
Well, as you're well aware, Morgan, and you and I have talked about this now for several weeks, that's certainly something to pay attention to, certainly something to watch. But I'm going to steal that line out of A League of Their Own when John Lovitz says, you see the way it works is the train moves, not the station. And the way it works is the world's largest economy, i.e. ours, is growing and continuing to grow. And I'm really looking forward to, our dispute with China getting settled, because they're getting hurt more than we are. So they're going to come to terms, and they're going to come to the table, and we're going to get something worked out there. And I'm looking forward to Brexit eventually getting resolved. And as it does, then that resolvable controversy will go away. And meanwhile, the world's largest economy, the train, moves, not the station. And the rest of the economy, the rest of the world's economies will be dragged along with us.
And Kirk, you mentioned some stocks that you see as being safer in an environment like this, oligopolists, Amazon, Microsoft, Google. What are your thoughts on names like Apple, Facebook, AT&T, Disney, Comcast, kind of going down a little bit in the market cap ranks? Apple and Facebook in particular haven't fared well recently, but could be argued to belong in that oligopolist camp.
Well, technology stocks are long duration stocks, and don't forget that rates have come down. So if rates stay lower, I think that favors technology stocks. The reason I like the oligopolists is they have pricing power, and I think that they will continue to do well in this market. And you look at, and we own these names, but you look at things like AT&T and Verizon in 5G, and you want to look for disruptors in their industry. So the names you mentioned are all great companies, and they've got a lot of pricing power.